What's up, guys? It's Cash Flow Cart. I'm back recording, and today we have the March dividend portfolio review. I'm super excited to get into this, guys. I actually took a lot of time off recording in February, just to focus on some personal stuff, some New Year's resolution stuff, things of that nature. And guys, I was still posting videos and the support's been great. We have a ton of new subscribers. We've had a ton of good comments. Dividendology is a pretty big dividend channel. I'm sure you guys have probably heard of it and or watched a few of his videos at some point. And it was cool. Actually, this morning I saw he commented on my video about, everything money, my reaction to their channel. That was pretty cool. So anyway, very excited for this today. Like I said, there's probably a lot of you that are new here. So this might be a portfolio review for some of our returning subscribers. But, if you're new here, this is more like a portfolio reveal. If you are new here, I do this once a month. We'll go through my positions. I'll give my thoughts on them. I'll talk about what I've been buying, what I'm focused on buying in the upcoming month. And we'll also look at, how much each position's paying me. So, let's get into it. Again, guys, shout out to Dividendology. Thank you for that comment. That's pretty cool to support a smaller channel in the niche. Let's get into it, guys. I'm here on the income estimator on TD Ameritrade. I go down to my investing portfolio, which is my dividend growth portfolio. And here you can see, guys, $2,247.35 estimated in annual income. So, that's pretty exciting. But at this point, I really want to get to that 2,400 mark. I think is kind of my next mental target. We talk about that sometimes, guys, whatever kind of goals you have to set for yourself to stay motivated, to stay investing. Guys, this is a long-term game. It takes time. It takes conviction, and you really got to commit to this strategy. And, you will start to see that income start to add up and compound. So, that total brings out a average monthly income of $187.28. It's currently late February, so looks like I have one more position yet to pay for this month. That is going to be Starbucks on the 23rd. But, without spending too much time on that, let's run through these positions based off market value. At number one this month, we have Apple at a market value of $11,438. And, we've seen Apple and Realty Income kind of flip-flop based on market sentiment for that number one spot. But, it's basically a tie right now. So Apple's at that $11,400 mark, estimated annual income of only $60. We talk about it every time, guys. This one for me is a yield on cost play. My cost basis with Apple is much lower than what it's trading at right now. So I'm going to continue to hold my shares and, hopefully one day realize a pretty sweet yield on cost on that Apple play. Right now I'm not as interested in adding. You see that smaller dividend yield of 53 basis points. Again, I'm not selling. I'm not adding. I'm proud of this position, and, that's how it's going to stay. Realty Income at the number two spot or tied for number one. 215 shares, a total market value of $11,281. And that one brings me in $662 in annual income. So, that's roughly $55 a month. Again, that's that, the 15th of the month, it pays me out. That's my only monthly payer. Right now, it's yielding 5.87, but I know this yield has been above 6 on some of these dips. And we'll look at the charts if we have time as well. So I like that one. It's a pretty big position. It does make up about 21% of my portfolio, and I would like to add to it. However, I don't know how much more real estate exposure I need right now. I've never been one to be real nitpicky about, sector diversification. However, I do have to respect that this is one of my bigger positions and I do want to be careful, building it to be too big. Maybe at some point we add another REIT or we just keep adding to Realty Income. It's been good to me so far. Moving right along, just over $10,000 at $10,000.62. We have Altria Group, ticker MO. I have 250 shares right now. I talked about last month, guys. I went ahead and got it to that 250 round number because I was like, if I can get Altria to 250 shares, maybe I'll stop buying because of, it'll just look good at 250 shares. However, I'm still interested in adding to this one. I think Altria is a great value play. What's it at? It's been around $40 a share. It's been just at that 10% yield. And, I can't really, it's hard for me not to add to this one or at least nibble at it over time. And I've continued to do that for like years now. My cost basis on it is $44 a share. So I'm slightly down in terms of share price appreciation. However, those dividend checks are huge, as you can see reflected here in the months April, July, October, and January. That's when Altria pays. In those months, I'm currently projected to make over $300, which is pretty great. For me, I understand the risk with Altria. I understand the nature of it being a sin stock, and some of the negative sentiment that comes with those style of plays. However, with this dividend yield, with Altria's track record and their experience, the risk reward for me is worth it. So I'm interested in building this one out more. However, I'll continue to stress it. I got to pay attention to this annual income number as it creeps up, makes up more and more of my, estimated annual income. That could be a little troublesome. I do have to ask myself, do I have the risk tolerance to have, such a big portion of my annual income coming from one position? I don't know. Right now I'm okay, but we'll have to see. We'll have to see what happens as I continue to add. Microsoft, I've got 20 shares. I mean, this one, obviously, if you guys keep up with the market, Microsoft has been a beast in terms of share price appreciation. I'm up huge on it. We'll look at the cost basis. My cost basis on this one's $243.18. That puts me at an open profit of $3,196. So, I guess that's pretty cool. Again, I'm a long-term investor and I really don't like to realize gains at any point. My gains I'm realizing are dividend growth, a growing income stream. However, when you see capital gains, it is nice. It does give you a little bit of a confidence booster just because you feel that, okay, I got some good bang for my buck. I found this stock at an opportunistic time and I was able to lock in, that starting yield. So, that probably was a lot, but that's how I feel, about Microsoft. Same kind of boat here as Apple now. The price appreciation has drove down that starting yield. I'm not interested in adding to it right now. However, I'm proud with the position I've built, and hopefully this $60 annual income will down the line it will grow to something more substantial. We see that double, triple, whatever, and all of a sudden that's going to be hopefully a good portion of my estimated annual income. Moving on. Next up, guys, we got Starbucks, ticker SBUX. Again, I'm happy with this one. The market value of Starbucks for me is $5,795. That's on 62 shares. So my average price on this one is $82 and change. Currently, Starbucks is trading at $95. So, I mean, some share price appreciation with this. However, for me, I wouldn't say it's run away from my cost basis, but I'm just kind of in a point where like I don't necessarily want to add to this position. I think initially when I built this position, I kind of envisioned it being, a medium sized type of guy in my portfolio. And, that's what it's grown into. I'm pretty happy with it. And I'm a big fan of their business. However, any business like Starbucks that is kind of a very trendy kind of a culture thing. For me, it's hard to justify building it into like a cornerstone type position just because they are young. It does rely on a lot of consumer preferences. And I know you want to say, oh, they have a wide moat. Yes, I agree. I'm just voicing how I feel about this one. I personally would not be comfortable with Starbucks being like, my top position. So, maybe if share price comes down a little bit, I'll nibble some shares, but right now I'm very blessed. I'm very happy with this 62 share position. Probably I could take it to 100 shares at some point, but right now I'm not in a rush on that one. Okay, Pfizer, and I've been talking about this one, guys. I know I released a video on Pfizer. I honestly don't know when it came out, but I have 167 shares now. So in February, Pfizer's been kind of my stock I've been most aggressively buying. Currently, the market value is $4,600. However, that is not reflective of how much I've invested in Pfizer. Um, I will pull up the chart if you guys bear with me. This video is not going to be all about charts, but I think it's relevant to pull up a chart if I'm trying to talk about chart specific stuff. So you can see here my average price on this one's $36. That does give me that loss, that open loss of $1,400. And I have been averaging down into this one for what feels like quite some time now. Let's see if we can get some trades to show up, guys. Sorry, bear with me. So show trades. Okay, well, this will at least give you guys an idea of kind of where my head's been at this one. So in the summer, I guess that was in May, I really realized, okay, Pfizer's come down off these highs. It's come down off this crazy COVID sentiment as the market started to realize, okay, this need for vaccines, isn't what it once was. And so I started buying Pfizer under $40 a share. There's been some other issues with balance sheet stuff. However, for me personally, my own risk tolerance, I see Pfizer as, a healthcare giant that's not going anywhere. And I see this as a great value play. So, this has been the one in February, at least, that I've built out the most. Again, for me, it's just a game of getting my cost basis down. Hopefully we do see Pfizer kind of hit this double bottom here. But, if that fails and it goes lower, I'm going to keep buying, guys. I have conviction in this one. I understand the risk. We could talk about this all day, but I will say this. And one thing I've kind of noticed about stocks in the healthcare sector, they tend to overreact to the downside. Okay. Does that make sense? So, we saw it, and I've referenced this example before, but just to kind of drive this point home, this is my favorite example of a healthcare stock overreacting and then having, a great rebound. And it's AbbVie. I was a shareholder in this dip. I was able to take advantage of this one. So, what year? 2019. I don't know if you guys were dividend investing back then, but there was a lot of talk about AbbVie. It was kind of like the popular, the turnaround play, similar to how people kind of talk about, I don't know, 3M today or whatever else. But their Humira patents were expiring, and it created this huge sell-off. It looks pretty similar actually to Pfizer's chart now. I was able to load up on some shares in this dip, and then, what do healthcare giants do? They figure it out. They've got other drugs in the pipeline. They continue selling, if something, if the patent does expire, they can still continue selling that drug. They're able to handle the competition from, generic competitors. But I guess I'm just showing this chart to drive the point home, guys, that healthcare giants, in my experience, figure it out. For that reason, I am interested in Pfizer as a value play. I am adding shares, and I'm going to continue to do so. I'll keep you guys updated. Again, over this 6% yield right now, and it's got, a long track record of dividend growth now, 12 years, I think, off the top of my head. All right, so, huge tangent there. Market value of Pfizer, $4,600, and that pays me $280 annually. Next up, we got Rowe. I think I said in the last video, by the March update, I wanted to have this one at 10 to 12 shares. So I've got it up to 10. Market value just over 1,000, and it's paying me $50 in income annually. I'm still pretty interested in this one, but with that being said, unfortunately, I haven't been able to build it out as aggressively as I initially intended. And I will say, I think it's because my mind has been on Pfizer. I mean, it's hanging around this, this mid 20 mark with this, impressive 6% yield. So I will say, guys, a lot of my new capital has been dedicated to beefing up this Pfizer position and lowering that cost basis. Unfortunately, T-Rowe's kind of been put on the back burner, but I am going to continue to add to it. And hopefully in March, I'm able to pick up a few more shares and chip away at that one. And then, guys, last but not least, oh my gosh, I feel like I'm rusty. I feel rusty recording this video, but that's okay. I said I was on a little break, but dang, I didn't know I would forget how to talk. Coca-Cola, market value $425. That's paying me $14 in estimated annual income. Guys, obviously this position down here is not substantial to my portfolio. However, I want to be very opportunistic with Coke, and at some point I want to move Coke, up the ladder until it becomes kind of a more sizable cornerstone type position. I'm a big fan of their fundamentals. I'm a big fan of their moat. However, being as opportunistic minded as I am, I'm not going to just pay any price for a huge chunk of Coke. So I'm kind of being patient. We'll see what happens. I mean, there was a decent dip at the end of 2023 on Coke. Unfortunately, I just did not have the capital to really build that out aggressively. And now Coke's back in the 60s. So it's I'm not selling it, but I'm going to build it at a slower pace, guys. I'll keep you guys updated as always. Again, I can't stress enough, guys. I've been overwhelmed with support on this channel. The growth's been amazing. We're going to continue to keep pumping out content. And I'm really excited, to build this community, guys. We've got a lot of big things coming. Again, thank you for subscribing. If you have any comments or whatever you want to say, fireworks. I don't know how these Apple reactions work, but sometimes they just randomly do it. All right. Anyway, guys, subscribe, and everyone have a great rest of your day. Thank you, guys.